Well, here I am coming to you live from the Omni Hotel in Boston, Massachusetts, as I'm here to speak at a Fidelity Advisor Conference later on this afternoon. But today is Thursday, December 12th, 2024, and here are the things that you need to know to get your day started, because it was an amazing day yesterday. The CPI came in, and now it appears to be a no-brainer for rate cuts, yet the trend is up. PPI came out this morning. In any event, the market is demanding a cut, but guess what? PPI came in hotter than expected. Former Fed President Richie, Dallas Fed President, asked yesterday, why are we cutting? Could he be sending smoke signals that JJ is considering no cut next week? Traders and algos would not be happy, and they wouldn't hit the sell button. I say good. Lower prices for long-term investors. And what do we have for dinner tonight? Well, we're going to have the stuffed calamari, which is number 7 on the Feast of the Seven Fishes for Christmas Eve. We'll get to that in a moment because they are outstanding. In any event, so apparently there is no confusion, right? Or at least that's what the market told us yesterday. Marky Zuckerberg is giving $1 million to the Trump inauguration campaign. Can you believe it? Meta rises by 2.2% on the back of that news. Nothing like trying to get into bed and do nicey nice with someone that he censored 4 years ago. I wonder what Jeffy Bezos is planning on doing. What's he going to contribute? But let's not go there right now, right? It's back to the markets because that's really what this is about. The Nasdaq surged by 347 points or 1.8% as investors, traders, and algos get hog wild for anything tech. By the time the closing bell rang, the Dow showed a loss of 99 points or 0.2. The S&P was up 50 points or 0.8%. I told you the Nasdaq was up 1.8. The Russell added 12 points or 0.5%. The Transwoods lost 95 points or 0.6, while the equal-weighted S&P added only 7 points or 0.1%. Again, note the divergence between the S&P and the equal-weight S&P due to the weightings of those tech names. As expected, the CPI came in higher than last month, but that was expected, suggesting that inflation is no longer trending lower and could potentially begin to turn up. But to be fair, this is only one data point. This morning, we're going to get the sister report, the PPI. This is inflation at the producer level, which in my opinion is more telling. Recall last month, we were surprised when the PPI came in actually hotter than expected. And that suggested that we would see CPI rise this much, which we did. Why? Because if the producer price rises, that means that producers are paying more for products that they use to produce the products that then we buy. So think about it. If they're paying more, who do you really think is going to make that right? You, the C in CPI, which is the consumer. The producer passes those higher prices on to us. It doesn't get any more complicated than that, so that's all you need to know. Higher prices at the PPI level are higher prices at the consumer level. Now, the PPI is expected to come in mixed. Top line up 0.2%, which would be unchanged, while the top month over month, while the top line PPI is expected to come in at 2.6%. In fact, it came in at 3%, and that's versus last month's 2.4%, so much hotter than expected. And if you take food and energy out, the PPI ex food and energy is expected to be up 2% month over month unchanged, while the yearly read is expected to be 3.2% versus last month's 3.1%. I think it actually came in at 3.4%. I'm not sure. I'm going to look at that. So let's see how the market reacts to this data point this morning. Will it confirm what the market did yesterday or not? Right now, U.S. futures were just a bit lower. Dow futures were down 75, SP's down 10, Nasdaq down 51, while the Russell was lower by 4. European markets today, well, when I wrote this, they were all just a bit higher, not dramatically, just north of where they closed yesterday. Italy being the outperformer, up 0.4%. The other ones were much, up 0.1, up 0.2%. Again, this is about placing your bet for the short term. Will they or won't they cut? Remember, none of the Fed members can speak. They're in lockdown mode, but you can get former Fed members that can offer up their opinions on what should happen, remembering that they have no sway. But could they have insight? Gavish? Now, like I said to you, and I've been saying, it's usually Nikki T of the Wall Street Journal, our friends at Goldman Sachs, that act as deep throat. But yesterday, former Dallas Fed President Richie, who's a great guy, says he is baffled that the market thinks that we should cut. He reminded us that since the Fed has cut by 75 basis points, rates have done nothing but go up. Markets are doing well, he said. He went on to say, and I quote, financial conditions are very accommodative. That's interesting. Right now, lots of private capital out there, lots of private lending is strong. But if I were at the table, I'd say pause. Remember, he's no longer at the table, but could he be sending a signal? Now, he would not cut next week, and then he would wait to see what the data continues to tell him, which is what I've been saying all along, saying that they're having trouble getting us to 2%. So why are we cutting? Nothing is screaming for a rate cut other than the traders, the algos, and maybe Larry Fink, CEO at BlackRock, right? They have $11.5 trillion of assets under management, who said at a conference in Saudi Arabia yesterday that he's expecting the U.S. is going to cut rates by 25 basis points next week. It's done. It's over. Nothing to question about. He went on to say that American mortgages are more often than not priced for 30 years, which means interest rates do have little impact on the largest assets of many households, their homes. Oh boy. Well, which is true if you already own your home. I guess you're locked in at a rate. But that's not true if you don't own your home or if you're trying to sell your home, right? Higher rates make it more expensive to a buyer, and higher rates cause sellers to have to accept lower prices. Mortgage rates have done nothing but go up since JJ and the Inflation Orchestra cut rates by 75 bips. What were 6.3% mortgage rates have now become 7% mortgage rates. The cost of a $500,000 mortgage then was $3,094.86 a month. Today, that same mortgage would cost you $3,326.51 a month. That's a 7.5% increase in the cost of that mortgage. I'm just saying. Price increases over the past 4 years have been dramatic. Home prices are up 43%. In addition, prices of everything are up as well. Apparel up 17%, new cars up 19%, food at home up 23%, restaurants up 25%, electricity up 30%, auto insurance up 61%. Fuel oil up 50%, and the list goes on and on. But just to remind you, yesterday's CPI revealed that prices are still rising at a 3.3% rate year over year. They are not falling at a 3.3% rate year over year. So while they tell us that inflation is better, and yeah, it's better than the 9.4% we saw in 2022, we are not in a deflationary environment at all when prices actually fall. To do that, the Fed would need to put us into a recession, just like Volcker did in 1981. But JJ is apparently not interested in doing that. They should have done that in 2022 is when they should have done it, but they failed. And then yesterday we heard Janet Yellen apologize for not doing more, offering regret, saying she's sorry. I said, oh boy, really? We discussed this on the Big Money Show yesterday. I put the link in my written blog. I also posted that link on my Twitter feed, @Kenny Polcari, so you can see my thoughts on Janet Yellen's apology for not doing more, because I think it's baloney. She had the option to do something, and she chose to do nothing. In any event, it is what it is, and we are where we are. So now let's see who really wants to fix it and who doesn't. At the end of the day yesterday, the S&P sectors were mixed. We saw strength in tech up 1.5%, financials up 0.2%, consumer discretionary up 1.8%, energy up 0.2%, and communications up 1.6%. The other sectors were led lower by healthcare down 1.4%. Basic materials lost 0.3%, real estate and industrials down 0.2%, utilities lost 0.6%, think lower rates. Consumer staples are up 0.8%, lost 0.8%, think boring and not really sexy. Now, lately we've been hearing a lot about quantum computing and the role that it's going to play in AI and the future. On Monday, we discussed IONQ, which is up 140% year to date. But there is an ETF that gives you exposure to this group. Sylvia Jablonski's Defiance ETFs has one. It's called QTUM, and it's up 42% year to date, and it includes names like QTBS, which is up 363%, Rigetti up 649%, IONQ up 140%, all very exciting. Down the chain, semis had a great day. Stocks up 2.5%, robotics and AI up 1%, IGV up 1.5%, cybersecurity up 1.5%, disruptive tech up 2%. Gabish? The VIX fell further into complacency territory, now trading at 1376, moving deeper into the no worry zone, which is why I say you need to be worried. But you can't fight the tape. That doesn't mean that you should also chase the tape. This is a time to be really smart. Do your due diligence. Do not get drawn into the FOMO mentality, right? That fear of missing out. Bonds sold off again. The TLT down 1%, while the TLH lost 0.7, and the AG gave up 0.25%. And so what did yields do? They went up. The 2 years now yielding 4.17%. The 10 years kissing 4.3, with shorter duration 3 and 6 month bills offering you 4.25% and 4.16%. Current 12-month CDs are between 4.2 and 4.5%, depending on what you deposit. Deposit more, they give you a better rate. Oil rose by 2.65% or $1.82 yesterday to end the day at $70.40, now piercing both the short-term and intermediate-term trend lines that are converging right here at 70.33. This is happening even after the IEA tells us that the Saudi supply delay is not going to prevent an oil glut next year. They think we're going to be oversupplied by 1.4 million barrels per day. Well, I guess all the buyers must have missed that memo. More supply should drive prices down, not up. But the reason we did see strength was because of the comments around tighter curbs on Russian and Iranian oil flow. And the new national security advisor nominated by Trump is Mike Waltz. You know him. He's a great guy. He's a retired Army Green Beret, and he brings extensive military and policy experience to the table. And he is known as a vocal advocate for strong national defense and has expressed hawkish views on China and is expected to put maximum pressure on Iran. And that includes Iran's oil. Less Iranian oil may mean that we may not have that oversupply next year, something the Saudis would love to see. Less supply would mean higher prices. And remember, UBS put that note out on Monday morning calling for Brent to trade in the 80s next year, which is higher from where it is today, which means WTI should be trading in the mid-70s if that's true. Gold, which pierced $2,700 on Monday, traded up as high as $2,756, is churning right in here. Recall that I told you on Monday that if gold pierced the trend line at $2,700, then we could see it trade up to $2,750 in short order. How's 2 days for short order? This morning, it's just digesting that 100-point move higher and is trading down $13 at $27.43. It is now in the $2,700, $2,800 trading range again. And so I think we stay there just for a little bit until we figure out what's next, right? U.S. futures remain lower as we waited for the PPI, but I'm not sure it's going to make a difference. The market is now pricing in a 100% chance of a 25 basis point cut. But let's see what the analysis says today. So I do not see how JJ can turn around this without causing all kinds of chaos in the final 2 weeks of the year. Although I am still very much in the no-cut camp, because I, like Richie Fisher, see no reason for the cut other than to pacify the markets because JJ apparently has painted himself into a corner. So cut now, but then don't expect any cuts in the first quarter of 2025. And if inflation the next couple of months continues to tick higher, watch out, because rates may have to rise and not fall, right? Reminiscent, once again, of 1980. The S&P ended the day up 50 points at 6084, all in the excitement that JJ's not going to disappoint. The retest of 6,000 that I was hoping for, not happening today, I don't think, but the week is not over. But nor do I think we're ready to pierce 6,100. So we remain in that 6,000, 6,100 trading range, which I think will be there right till year end. Again, at this point, I would let your portfolio ride, only making last-minute changes due to tax planning issues. New money should be sitting in your government money market fund, making 4.25% while you wait. That is a financial decision, so you're not wasting your time or energy. Where I fully expect in the new year, or at least I hope, for some early weakness to take the froth out, and I do think that that's coming. In the end, patience is always a virtue. Okay, so now this is recipe number 7 on the Feast of the 7 Fishes for Christmas Eve, and this one is the stuffed calamari. Oh my God. If you like calamari, this is an absolute have-to-have. It's outstanding, but you have to like calamaris because this is a bit of work. But the result, to die for. For this, you need the calamari bodies, right? So you need the big ones for stuffing. So you got to tell them, right? You can't use the tentacles or anything. You want to specify at the fish store. You just want the bodies to stuff. You need homemade Italian-style breadcrumbs. You need white wine. You need olive oil, toothpicks, homemade marinara sauce, the same as the lobster sauce that I gave you yesterday, except without the lobster. You need salt and pepper. You need basil. You need, all the stuff you need for the sauce, which I gave you yesterday. So here's the deal. You order the calamari from the fish store. You want them cleaned. This means that they trim the tentacles and they take out the membrane from inside the calamari. But here's the reality. You still have to make sure that they're clean. So when you get home, you need to wash them and confirm that the membrane was in fact taken out. You got to stick your fingers in there and see if there's a membrane. If it is, you just pull it out. If not, if it's still in there, you got to kind of turn the calamari inside out and then rinse it well and then turn it back again. That's a trick though, because you have to be very careful. You don't want to rip the body, otherwise you can't stuff them, right? Because they won't be stuffable if there's a hole in them. Now, you're going to take a bowl of the seasoned breadcrumbs. You're going to add enough olive oil just to make them moist. Not soaking wet, you just want them moist. Add a splash of your favorite white wine. You know me, Pinot Grigio, Santa Margherita. You don't want to use a Chardonnay. Absolutely not. You want to mix it well, and then you want to try to make a ball with the breadcrumbs just to see if they hold in place. If they do, it's perfect. Now, carefully stuff the calamari using a tiny teaspoon, a tiny one of those like espresso spoons, or your index finger. Put the breadcrumbs in there and just push them easily down to the tail. Don't overstuff them, because when you put them in the sauce, they grow and they'll explode if they're too stuffed, right? Now you need to stuff them just enough so that you can pin them closed with a toothpick. Repeat that until you've stuffed all the calamaris that you bought. 15, 20, 30, however many you bought. Once you have them stuffed, then drop them into the marinara sauce that you have already prepared. Turn the heat down to simmer. Do not boil the calamari, right? Do not boil them. They need to simmer. They're going to begin to plump up and they'll turn like a whitish, reddish because of the sauce, because they take on the color of the sauce. They're going to cook it about 30 minutes, max. Then when that's over, turn the heat off, let them rest, right? Let it come down cool. Again, you want to make this the day before. You want to let it sit overnight in your fridge. The next day, you want to take it out of the fridge and let it warm up to room temperature, just like you do the lobster sauce. And then you want to heat it up on simmer. When you're ready to eat them, you serve them in a large bowl with plenty of the tomato sauce. You can also make this and put it over linguine if you prefer. The other option, and one that I always do, is if you make both the lobster and the calamaris, then you mix the ladles of each, because they have a little bit of a different flavor. But when you mix them, oh my God, they are delicious. And then you mix the two sauces, and then you put it over the linguine. Oh my God. Make sure you got plenty of first-grade Parmigiano cheese or Romano Locatelli cheese. Either or works fine with this dish. You'll never go wrong. In any event, until tomorrow, where, by the way, I won't have a note tomorrow because I just won't have a note tomorrow. I will see you on Monday. Take good care.